Hello, everybody, and welcome to another episode of Scott
At
and
2 p.m.
Stunts.
Eastern Time, we get the US interest rate decision. Forecast no change on the prior 5.25%, the FOMC SEP, and the
And
FOMC
Stunts.
rate statement. Looking at some analyst predictions, ING says market pricing has shifted massively over recent weeks, but we think the most likely outcome remains the Fed leaving policy rates unchanged on the 14th of June. There will be some dissent and a shock.
Oh, there. Everything's going nuts. Give me 2 seconds, people.
Tighter lending conditions could
I should have
prompt a
fixed it.
recession with inflation falling swiftly back towards the target. On the 4th of May, Fed funds futures contracts were pricing in 86 basis points of interest rate cuts by year end, and the target range heading below 4% at the January 2024 FOMC meeting. We believe that there will be a majority on the committee who think they have tightened policy a lot, and it makes sense to wait. This was certainly the commentary from senior Fed officials such as Governor Philip Jefferson and Philadelphia Fed Governor Patrick Harker, that while there is still significant room for improvement, the Fed is close to the point where we can hold rates in place and let monetary policy do its work. Moreover, recent data releases have been sending very mixed messages, which suggests it may make sense to pause to evaluate.
CD thinks 25 BP hike? What?
And JP Morgan says on Wednesday the Fed should provide more clarity on the trajectory of rates after. So on Wednesday, the Fed should provide more clarity on the trajectory of rates after vacillation in market expectations over the past month, which we illustrate in the week's chart. As of Friday, the federal funds futures market was pricing in a 28% probability of a hike in June and a 54% chance of a skip in June, followed by a hike in July. Since the FOMC last met, expectations have oscillated due to the resilient growth and moderating inflation and diminished threats from regional banking turmoil, a solution to the debt ceiling standoff and mixed messages in the public pronouncements of Fed officials. Given a gradual slowdown in growth and inflation, and the fact that we have yet to see the full effect of the cumulative 500 basis points of hikes so far, the Fed would be well advised to pause at this point. Nevertheless, another hike is still clearly on the table, and if the Fed doesn't hike this week, Chairman Powell will likely emphasize that skipping a rate hike now does not necessarily imply that the Fed is done raising rates. However, regardless of the Fed's decision and messaging this week, we expect to see rate cuts within the next year that should improve the backdrop for investors across a broad range of assets. At 2 p.m. Eastern Time, we get US interest rate decision forecast, no change on the prior 5.25%, the FOMC SEP, and the FOMC rate statement. Looking at more analysts' predictions, Wells Fargo says at the conclusion of the Federal Reserve Open Market Committee meeting on May 3rd, there were signs that the most aggressive tightening cycle since the 1980s was near its end. Policymakers voted unanimously to raise the Fed funds rate by 25 basis points to 5% to 5.25%, a 15-year high. Yet the committee was careful to keep its options open about additional rate hikes. Rather than nothing that is anticipated, ongoing increases, or even some additional policy firming, the post meeting statement merely laid out the factors of the FOMC would consider in determining how much additional tightening may be appropriate. Monetary policy works with a lag. With 500 basis points of policy rate hikes behind us, the Fed may take the chance to wait and see, at least for another month. We see the most likely outcome for next week's meeting at the FOMC making no change to its policy rate, but making clear that another hike at its July 26th meeting remains a distinct possibility. This would allow a compromise between officials who believe further tightening is necessary and those who believe it is time to be patient and let the medicine of the past year fully take hold. We think this balanced approach will be enough to stave off any dissenting votes, but the uncertain outlook and increasingly fractured views within the FOMC have increased the odds that one or more dissents could occur at one of the upcoming meetings.
Destination attempt done solely to try and piss people off. Not to mention copying techniques employed by scammers in the process. Nice one there, Grizzly. Seems like a good move. Now, he was also actively involved in a hit job video on Honor Pixel which claimed a knife Honor had sold in January.
All right, all right, all right. We are 1 minute and 20 seconds away from the decision, which is got come pretty sure. This one is going to be interesting. The FOMC expectation. I think we're going to get a dot plot. We're going to get a dot plot. Now, that's going to be
1 minute remaining. I'll lead with the US interest rate decision.
Here. Whoa. 30 seconds. All right, everybody. We're getting 30 seconds. Are we going to get any major movements to the upside or the downside? It's going to be interesting because we're looking at the dot plot. That is what we're going to be looking at right now.
10 seconds.
As soon as we get it here, it's going to be 5.25. I'm not too worried about that. It's going to be the dot plot because that's future expectations. Then from there, we're going to start to make the best decision.
No change, no change. Rate remains unchanged at 5.25% as expected.
Yeah, no
Fed says
change.
banking system is sound and resilient, and Fed policymakers see higher GDP growth in 2023 and a lower unemployment rate and less progress on core inflation than they saw in March.
Ooh, we're seeing a downturn, but not massive. I mean, it looks bigger than
The
it
Fed
is
says
here.
holding rates allows FOMC to assess additional data, and median rate forecasts rise to 5.6% at the end of 2023 and 4.6% at the end of 2024. The Fed holds benchmark rate at 5 to 5.25% target range, and the FOMC vote was unanimous.
Oh, wow. Let's have a look.
The Fed will continue the same pace of reducing Treasury and MBS holdings, and economic activity expanded at a modest pace. The Fed says jobs gains are robust and the unemployment remains low. Fed median rate forecasts rise to 5.6% end of 2023 and 4.6% end of 2024.
Ooh, that is ugly.
Fed officials see 3.9% core inflation at the end of 2023, 2.6% at the end of 2024. Upside in the dollar, downside in S&P.
I'm surprised. 5.6, so that means that they're going up.
US short-term interest rate futures drop after FOMC decision as traders price in more Fed rate hikes ahead.
That's not good. That's a shocker. It's a little bit of a rock pool. The fact that they're thinking of a hike. Insane. What's happening here? Why?
Fed swaps price in a higher peak policy rate of 5.35% in September. Yield on 10-year US Treasury notes rise after the FOMC leaves rates unchanged, last up 0.2
They're
basis
hoping a
points at
hike next time?
3.841%.
Why?
And yield on 30-year US Treasury notes down 2.9 basis points,
We just
last
broke
up
through resistances.
3.912%.
It's a lot of risk right there. That was a lot of risk. Right, so let's go to sell.
Order filled.
Let's reduce the little. Ooh, market didn't like that at all. That means he's gonna talk. He's gonna talk and he's gonna make it bad. Where's my dot plot? Where is my dot plot?
We have posted the FOMC SEP report for the 14th of June 2023 on the feed for all those interested.
Insanity. This is not good news at all. Crash the market. Insanity. Well, not really crash the market, but I mean for what it is, yeah. Feels like it's bouncing here, and we're probably gonna get when Powell speaks, we're gonna see. But 5.6, that's not good. That means that we're getting higher, like insane hikes. Let's have a look. Let's go to the CM watch tool. In 41 days, we get the next decision in July. But that's definitely going to be moving up. Insane. It is insane. Yeah, that's punishing markets. Holding tech right now, you're losing money. Turned it around, and Powell's going to make it worse, I think. Like, what can he say that's going to ease markets, right? Insanity.
Fed swaps no longer consider 2023 rate cut likely.
Oh, wow.
We have posted the FOMC dot plot on the feed for all those interested.
Thank you so much. Oh my goodness, that took a while. Holy guys. Mine ain't even loading. Insanity.
US dollar trims losses versus the yen after the Fed decision, last down 0.2% at 139.91.
Where's my dot plots? Where's my dot plots? Website is going nutty.
US stocks extend fall, Dow Jones down 1%.
Oof, that's a rock pool, and I don't trust it. I really don't. Yeah, this was a buy the rumor, sell the news sort of deal. That is for sure.
Order filled.
Oof.
Order filled.
US crude futures extend losses down more than $1 at $73.33 a barrel.
Order partially filled. Order filled.
Hmm. I dislike that. I definitely dislike that. It is bouncing. Insanity. Markets are going nutty. Like that. Damn, that hurts. Bad day, bad day. Where's my dot plot, man? I can't believe I haven't seen the dot plot yet. Holy fuck. Thank goodness. Holy. The majority is sitting up. Wow, that's insane. So this is the dot plot. This is what we're looking at right now. Insane.
We have posted the live feed for FOMC press conference for all those interested.
Yeah, that fucking blows, dude. Holy. I don't think Powell's gonna help this at all. Let's have a look at what he has to say.
After this, we ended up getting 5.6. Not happy about that. What else did we suggest? We said that where did I put the? Oh, there it is. Okay, we said that this would probably go up. I suggested GDP would probably go up, and I wrote markets next to it. The reason I wrote markets next to it is because the market likes it when we avoid a recession, and so a higher GDP is good. What did we get? We got, ooh, look at that. That's a 1%. That's actually very good. That's why you're getting that higher projection on 5.6, because real GDP forecast is higher from the Fed.
Brent
They
crude
did
futures
lower
extend losses
2024
down
by
more than
one basis
$1 at
point, and they lowered
$73.23 a
2025 by
barrel.
1 basis point. So this is a really big push over here. I like to see this. So we went plus 60 basis points, minus 10 basis points, minus 10 basis points here. The unemployment rate, I said we would see. Oh my gosh, look at that. I nailed it. I said the unemployment rate would go to 4.1, then 4.3, 4.3. We got 4.1, 4.5, 4.5. So they did nail this. So I got one thing right. At least that makes me happy. But that's a good sign because we've actually seen that. And I like seeing the Fed adjust those numbers based on what we're actually seeing. So we know they're with us here. Are they all with us? All right, we've got core PCE inflation projection sitting at 3.6. That's a 10 basis point increase from the last one. What do we have in this one? They actually take core PCE and drop it. No, I'm sorry. No. They raise it 30 basis points here. And headline, what do? They take that 3.1 versus 3.1 we've seen in December. And then we go to this one, we get 3.3 going to 3.2.
Boys.
So they drop. Stand by.
Gonna learn how to do all that stuff. All right. Thanks so much for watching.